Welcome back. I'm Pratap here. This is the third video in the series Performance Evaluation of NeoStock's High Liquidity Zones. So I'm taking a report published on 22nd September 2023 for the stocks near daily demand and supply zones. Let me expand. This is the video having the daily demand zone stocks near daily demand zones and supply zones. We have published on 22nd September 2023, that is end of the day report. So let us look into the high liquidity demand zones, and after this we will look into high liquidity supply zones. To save our time, I have already drawn the zones in trading view, because each time showing you the leg in, leg out and going back and drawing on the live, it is taking a lot of time. So I want to reduce video time. So how many liquidity zones we have? Look into only the demand zones, because these are all the stocks near demand zones. We have a Nifty 50, and let us look, even though it is index stock, let us evaluate this particular stock, because most of us might be trading in Nifty 50. Nifty metal also high liquidity, all-time high zone. Let us avoid evaluation because it is index stock. We have any high liquidity demand zones? Yes, we have. Cholamandalam Finance is there. We have Divis Lab, but this is a counter trend. Sorry, this is a confirmation trading related. Time being, we'll avoid this. Let us focus on S underscore DZ and TCP underscore DZ or C underscore DZ. Let us, because those three are the highest priority. And then we have Godrej properties. And then we have HAVELLS. And what else? That's it. So let's start with Nifty 50. After 22nd September, reports we have to evaluate. So this is the candle, 22nd September 2023, and this candle shows the stock is near to the daily demand zone. This daily demand zone is a high liquidity zone. But the risk is very high in this zone, right? That's why what we are doing, we are fine tuning to one time frame or two time frames lower. Generally, I do one time frame lower for daily demand zones, that is 75 minutes. So let me go to 75 minutes time frame. So I have drawn the zone in the 75 minutes, fine tuned. Here, 23rd, the next day, we published the report on 22nd. The next day, 23rd, it gave the entry and 9:15 candle as well as 10:30 75 minutes candles. And when it reached the target at 13 hours candle, it reached the target. Okay, what is the entry? Entry is at 19,615 and the target is at 19,734. Minus, this is the target, and entry is it's at 19,615. So it gave 119 points profit. Within the same day, we got the entry. Within the same day, we got the target. Both happened on the same day. So what is the lot size of Nifty? Nifty, it is 50 into 50. So we got 5,950 as a profit. And what is the cost of the lot? Let's go to margin calculator. This is zeros margin calculator. Nifty, it is 50 is the quantity, that is lot size, and the cost, it is 1,11,344. For 1,11,344, we got 5,950 profit. So how much percentage we got? Into 100 divided by 1,11,344. So we got 5.34% profit. Good. Within a day, we got 5% more than 5% profit, or around 5% profit. But if you look into this, because 75-minute zone is having more depth, that means more pending orders are there. It gives second entry within the same 75 minutes. Because multiple test is working because we are inside the high liquidity daily demand zone. But generally, what is our strategy? Within the high liquidity, we look into the 75 minutes, and the fresh 75 minutes zone, we take the entry. Second time, mostly we avoid, because most of the times, the second time entry may fail. But here it worked because the depth of this zone is a little high. That's why it almost went close to the distal line. But definitely I would have avoided, because we don't know. This time it worked, but most of the times this zone will be violated and then it go to the one below this. Because within the daily demand zone, at least minimum two 75 minutes demand zones we can find. But this gave a good profit. But anyway, I'm not taking this entry within this 75 minutes. Now, what happened? This zone is broken and price reached the next 75 minutes demand zone below the first one. Here I would have taken the entry because my risk is also very limited here. But what about the reward? At least this supply is started here. We have a new supply started. So somewhere here. 19,715, I would have exited. And one more point I would like to show you. If you look into the daily time frame, there is a daily EMA is also there. Most of the time, if price goes below the EMA, daily EMA, when prices bounce back, the prices go at least till the daily EMA. You might have observed this point. If price goes below, and during the bounce back, at least it goes till the daily EMA. So that way I would have set my target till this daily EMA. So either strategy you can follow. So what is our target? 19,720. 19,720 minus, what would have been my entry? 19,518. 19,518. So we got 202 points. Profit we got within how many days? Within 2 trading days. First trading day, we got the entry. Next trading day, it reached the target. So what is the lot size of Nifty? 50. 50 is the lot size. So we got 10,000 rupees profit. Yeah, how much percentage? Into 100 divided by 1,11,344. We got 9% profit. This is your return on your investment in just 2 trading sessions. So this is one advantage of going with high liquidity zones. But we should trade properly, or you should, I mean, you should adapt a proper strategy, especially when you are dealing with high liquidity zones. Now let us look into the next stock. Let me explain. So what is the next high liquidity demand zone? Cholamandalam Finance. Chola Finance. Look into the Cholamandalam Finance. This is not only a fresh zone, the zone is fresh. So look into the trend. Daily trend is uptrend. Here, daily trend. Next weekly trend is uptrend. Next monthly trend is uptrend. All the trends are up. So that means trend is in our favor. And what about the location? Location is at the equilibrium. So this is also another good sign. So let's go to Cholamandalam Finance. So this is the high liquidity demand zone. And where you want to take entry? The 75 minutes demand zone, which is in confluence with the daily demand zone. At this daily demand zone, zone high, because this is a fresh zone. At the zone high, you need to look for the trade. And also look into this 75 minutes demand zone. It is in confluence with, it is having a daily EMA confluence. This 75 minutes demand zone is having a daily EMA confluence. This is again another powerful sign. This zone works very good. 75 minutes. Yeah, this is 75 minutes. So here we have a leg in, base, and leg out. It is, but this one is already tested once. Can we take an entry? Yeah, see here, the trend is in our favor. And see how much demand it already consumed here. Very small. So next time the price may go just more deep into this demand, and then again it may go up because trend is in favor. And this is almost close to the all-time high. And moreover, this one is high liquidity, the high liquidity zone. The daily demand zone is a high liquidity zone. So that way you can take a deep entry in this zone, or you may wait till this demand zone. But is price reached till this demand zone? No. If you would have waited till the demand zone, you might have missed the entry. But those who have taken in this demand zone risked second time. Definitely they would have got good profit. If you ask me, can we take second time in this demand zone? Because generally inside the high liquidity zone, I prefer second time or even third time. But this 75 minutes is already once it took. Second time it might have gone inside, more deep inside. Maybe I would have missed the entry. But in case if anybody would have taken an entry in this zone, let us see how much profit they would have gone. But actually, as per the rules, we missed the entry. You should remember this point. As per the rules, we missed because price didn't reach till the zone high of this daily demand zone. But 75 minutes is in confluence with daily demand zone. And if you would have depended on this 75 minutes zone, you would have got an entry here. What was your entry? 1175. 1175 is your entry. And this is the target, the 75 minutes supply zone. This is 75 minutes demand zone, and this is the 75 minutes supply zone. And till this supply zone, price reached. Actually, the supply zone is violated, but we would have we would not have, we may not be knowing because now price is already happened. We can see what really happened here. But as per at the time of our trade planning, this would have been our at this level would have been our target. So let us calculate based on that only. So almost 1225. 1225 is our target. So we got 50 rupees profit on one share, on each share. So what is the lot size of Cholamandalam Finance? One two five zero is the lot size, but what is the cost of the lot? 3,19,980. That means almost 3,20,000 is the cost of the lot. But how much profit we got? 50 into 1250. So 62,500 rupees profit we got. In how many days? Let's go to daily. So this is your entry. Here we got your entry in this candle. This is the first candle, second, third, fourth. Here we reached the. So in 4 trading days we got this profit. If you would have taken risk and took a second trade in this 75 minutes demand zone, you would have got this profit. If you would have avoided this 75 minutes demand zone because it is already tested, then you might have missed this trade. But we are just, as per our rules, we missed this trade. But in case if you would have taken how much profit you might have got, we are calculating. So 62,500 you got in 4 trading days. Let us see return on our investment. 62,500 into 100 divided by cost of the lot, that is 3,19,982. So you got 19.5% return on your investment. ROI. ROI means return on investment. 19%. But anyway, definitely we missed this trade because it didn't reach our. We would have taken in the 75 minutes, but at this zone high. Which zone high? Daily zone high. So price didn't reach till daily zone high. Why it didn't reach? There are several reasons. Trend is very powerful. Already this 75 minutes demand zone is having EMA confluence. So all these factors would have favored, and there could have been more pending orders in this 75 minutes demand zone. Okay, let us look into the next stock. Cholamandalam Finance. We missed it. What is the next one? Divis we are not looking because it is a confirmation trading related. And that's a different concept. Yes, Godrej Properties. Godrej Properties. Is it a fresh zone? No, it is already tested 4 times. Now we are looking for fifth time entry. Do fifth time it will work? Maybe it may work. If our strategy and our risk management is defined in a proper way, I am believing it works. The reason is its weekly trend is up, daily trend is up. Of course, daily trend is down because see the curve, it is low on the curve. When daily prices reaches low on the curve, obviously the trend will change. Because it is low on the curve, from here there are higher chances of going up. The price is going up. There are higher chances. And odd enhancer score is good. 12 out of 15 is a good score. The maximum score for odd enhancers is 15. So out of 15, 12 score is good. And what about risk reward is also good, 2.77 and 10.09. We may not be waiting until it reaches this reward. The reason is always we look into one time frame below. And our trades are short-term trades. So all the factors are in our favor, especially the intermediate time frame trend and daily time frame trend is in our favor. Location is in our favor. Because location is in our favor, we don't bother about daily trend. So what we have to do, we should go to lower time frame for that is 75 minutes time frame. First we look into daily time frame, Godrej Properties. GODREJ. Okay, Godrej Properties. So this is the high liquidity demand zone. Already tested once, tested second time, tested third time, tested fourth time here. So total how many tests it is showing? Godrej Properties is having 4 tests and 5 rejections. But it is not pierced. If it is a pierced zone, I would not have taken the trade. Okay, what I have to do, I need to look for a 75 minutes demand zone is in confluence with this daily demand zone. So let me go to, so where the 75 minutes demand zone should be there? At the proximal line or deep inside this. But what happened is, we have a 75 minutes demand zone. Previously, price reached this 75 minutes demand zone and then price moved up. Already tested once. That means this 75 minutes demand zone will be broken this time. Yeah, it should have been broken, but that is not happened. It's not happened. And it won't happen also immediately. Why I'm saying it won't happen? Mostly it won't happen. That is the word. Maybe I should not say it won't happen, but I'm saying mostly it won't happen. The reason is this 75 minutes demand zone is also high liquidity zone, which is formed recently. See, it is already, this daily demand zone is already tested once. Second time it tested. Third time it tested. Fourth time it tested. And after that, a new high liquidity 75 minutes demand zone is formed here. How can I say this is a high liquidity demand zone? So for that, I used NeoApp's another tool called demand zone chain. I already published one video during last week for Nifty and Bank Nifty, NeoStock's demand zone chain. Now that demand zone chain tool I am using for Godrej properties. See here, Godrej properties limited. Which time frame? 75 minutes time frame. This is supply demand zone chain. It is having all its demand and supply zones, including this zone column having the type of the zones. Is it a normal supply demand zones or high liquidity demand zones or pierced, that is low priority demand and supply zones. If you look into this, there is a candle, leg out candle. That is August 23, 11:45. All these are all supply zones, supply zones. Yes, here you look into demand zones. Here, see, 21st August 2023, 11:45, we have a leg out. 21/8, 23, 9:15, we have a leg in, and we have a base candle. Look into this chart. So this is a leg in. You might be wondering, this could be a base candle. Why I'm saying this is because the software consider this candle as a expanded range candle. Even though it looks like base, but the software, according to the software calculations, the biggest problem with these softwares are when you zoom, then mostly you understand the real size of the candles. See, it looks like a big candle. This range of this candle is beyond the normal base candles. That's why software considered, because human eyes sometimes may not understand exactly every candle in a proper way. When you zoom out, mostly this candle looks like a base candle, but when you zoom, this size of this candle is almost equivalent to this size of the candle. That's why software considered this as a ERC candle. ERC means expanded range candle. ERC candles will be used as a leg in, and then we have a base candle, and then we have a leg out. But in normal way, what we do? We consider both these candles as a base. If you don't think from software, at the time your risk reward management calculations, everything will change. The advantage in using softwares are softwares don't really bother about how they visually look. They just look into internal calculations, the software, and then based on that, it will take a decision. So this particular zone is a high liquidity zone. Is it a high liquidity zone? Yes. See here, yes underscore DZ. So it is a support demand zone. And as per this is a today's report, that's why it is having two tests. But on 21st, 22nd, if you would have looked into this report, it is already tested once on that day. Now we got second test, it got two tests. For rejections and see pierced count 0. It is not at pierced. So 75 minutes demand zone is a given second test. So why should we miss this? Because the risk is also very minimal. See the risk in this zone. Where is this? Not this. This one, yes. It is just 0.64%. But see the reward. We got a very good reward here. So that's why we should not miss this trade. We got a very good reward. But generally what happened when price tested in the high liquidity zones, second test it may go little deep or more deep and then turn back. Because we don't know how 15 minutes, if you go one time frame below, the 15 minutes demand zone, demand zones might be there inside this. The second, it might have reached till the second 15 minutes demand zone. Anyway, I don't want to bother here. The reason is the risk is very minimal here. It is not bothering me to go to 15 minutes demand zone. So I want to take 0.06% is a nominal risk. So I don't mind to take that risk. So what is my entry? This zone. One thing I can keep at this zone high or little below this previous, because previously it consumed the orders here. Little below this, I may take the entry. That is also possible. But anyway, I don't want to fine tune that much level. Directly I go to this zone high, the entry. Either zone high, I can go to the other approach called type 2 proximal. Zone high is type 1 proximal. And highest candle body is the type 2. This is also we can take. Because already previously tested at highest body in this zone. So our entry could be 1535. What is the target? This zone low 1576. So 41 rupees is the profit on each share. Let's go to margin calculator. Godrej properties. Quantity is the size of the lot is 475. And what is the cost of the lot? 1,58,355. So we can say close to 1,60,000. So 41 into 475, we got 19,475 rupees profit. Within how many days we got this profit? Let's go to daily time frame. Oops. We got first entry here itself. It's my mistake. So when we published our result on this candle, so next day we got the entry. Actually, we are looking into the second entry. We would have taken the first entry here itself. What could have been our supply here? We have a supply here. A good supply, drop, base, drop. That could have been our target. $75 supply zone. This could have been. Sorry, actually I was looking. We got our first entry here itself after our report. I thought this is our entry. The first entry, let me calculate. So 1535 is our entry. 1535 minus. So we got, it is a fresh zone. The time when price reached here. It is a fresh zone. And if this zone low is the target. What is the zone low? 1598, 50 paisa say 1598 is the target. 1598. So absolute value 63. 63 is the profit. So this is the entry and this is the target. The same day we got the target. Same day we got the entry and same day it reached the target also. Within the same day we got. It is almost like an intraday trade. So what is the lot size? 475. Into 475. We got 29,925. Close to 30,000 rupees profit we got. How much return on investment? Let us calculate. Into 100 divided by cost of the lot 1,58,355. So we got 18.89, close to 19% profit we got on the same day. It's a very good profit. This is first entry. Immediately after our report, the report we published on 22nd September. And we got our entry on, this is 22nd, 23rd, 24th holiday, Saturday, Sunday. On Monday we got the entry and Monday it reached the target. Again second entry we got on, because at the time the levels are changed because new supply zones are created. But still we got a good profit here also. So what happened? This last Thursday we got the entry, and Friday it reached the target. First time 18% profit we got. $19,475 was the profit. Second time. What is the return on our investment? Into 100 divided by 1,58,355. We got 12% return on our investment. First time within one day we got 19% return. Second time within 2 days we got 12% return on in our investment. On the same high liquid, 75 minutes, high liquidity zone. Actually, we want to take an entry at daily high liquidity, but we get into, because we want to fine tune the zone, and we identified 75 minutes high liquidity zone, and that high liquidity zone did not allow price go below this. That is what generally any high liquidity zones does. Maybe third entry, it may go deep or it will violate this zone. Now again price touch this zone and then it will go. Generally what traders will think, because this demand zone is broken, maybe price will be crashing, but actually just below this the daily high liquidity zones are waiting. Daily demand zones are having more pending orders compared to the 75 minutes. So interesting stock. We got two entries, two trades, two successful trades in this stock at 75 minutes, high liquidity zone. That is what generally I do. What I do, I just don't look into this. I will also look into 75 minutes. I will open this chain, supply demand zone chain, and I will find, are there any high liquidity zones just above our daily demand zone. Because the lower time frame high liquidity zone, sometimes it won't allow the stop to take an entry on the daily time frame. That is what happened in Godrej properties. The 75 minutes demand zone, it didn't allow. If anybody is looking for an entry in this daily demand zone, they would not have got, because just above this we have 75 minutes high liquidity zone. Definitely we get an entry in the daily, but one has to wait for a long time to get an entry in this stock. Okay, now let's look into the next stock. Godrej properties is over. Yes, we have HAVELLS. We have a C underscore DZ. It is already tested once. But remember, the trend is uptrend. Monthly is uptrend. Weekly is uptrend, and daily is also uptrend. So trend is in our favor completely. But what is not in our favor? The curve or location. It is high on the curve. That means we are near to the supply. Here two things will happen. This zone, this high liquidity zone, will violate the supply zones. That is one possibility is there. Or another possibility, because it is already tested, it might go down also. That is also possible. But see the trend. Trend is in our favor. So the chances of breaking this zone is less. I'm not saying it won't happen, but chances are less. And it is only tested once. Let us see if we fine tune to lower time frames, we may get a trading opportunity. So let's go to HAVELLS. So already I have drawn inside this demand zone, daily demand zone, I identified 75 minutes demand zones. This is the first 75 minutes, this is the second 75 minutes. Because it is already tested zone, I want to take a deep entry inside this. The same technique we followed in the previous discussions also. When you have to look for second entry in this zone, if this is also a high liquidity, 75 minutes also high liquidity zone. But anyway, let's go to 75 minutes. So 75 minutes already took a deep entry earlier. So what I want to do is, I'm going for the second 75 minutes zone, and at this zone high, I want to take an entry, the second entry. So the first 75 minutes is broken. And second one got the entry is triggered. At what price? This zone high. What is the zone high? 1372. And here we have a supply. Drop, base, drop, RBR. The supply is there. This is my target. This is my entry and this is my target. You have a good reward here. So 1330, 8.65. So 1338 is target. For easy calculations, I'm using round figures. So 34 rupees profit we got on each share. So what is the lot size of HAVELLS and what is the cost of the lot? Let us look into margin calculator. So 500 is the lot size and the cost 1,22,872, close to 1,23,000. Let us see how much profit we got. So 34 into 500, we got 17,000 profit. Within how many days we got? Let's go to the chart. Let's go to daily chart. So first day we got the entry on 28th, Thursday. Next day we got the target. That is on last Friday. Oops. Actually, I looked into the second entry. First entry also we got here also because we published our result on 22nd. We are referring 22nd. We got two successful trades in this. This is the first entry. This is the first entry. Let's go to the. We got two successful trades in HAVELLS. This is the first entry. This is on 25th because we published our result 25th Monday. Before that Friday, that is 22nd, we published the report. So we got our first entry. And this is the target. Why that is the target? I think 15 minutes I have taken this. Yeah. Because the actual move started from here. The actual supply. Because when price reached here, I didn't find any suitable 75-minute supply zones here. That's why what I did in this move, I went one more time frame lower, that is 15 minutes, and here I found a good supply. Exactly the same is respected. The price respected this supply. So what is our entry? What is the price here? Let's go to 75 minutes. Here also, I think I have drawn this 15 minutes. Because in the proximal line, because the reason why I fine-tuned this much is near proximal line, because first time price is entering into this high liquidity zone. Near proximal line, I didn't find a suitable 75 minutes demand zone. So that is the reason why what I did, I went to the one time frame lower, that is 15 minutes. And then I have drawn the zone. Next time when price reached this zone, I find right supply here, 15 minutes supply here. That's why this 15 minutes is my entry and this 15 minutes is my target. So what is my entry here? The height of this zone. 1381.40 minus what is my target? That is zone low. This is zone low. 1413.30. One four one three point three zero. So 31.9 rupees profit we got. We got the entry. On the same day again it reached the target. The same day we got entry as well as target. Okay, what is the lot size? 500. So 31.9 into 500. So we got 15,950 profit. 15,950. For an investment of 1,22,872. Let us see return on our investment. 15,950 into 100 divided by 1,22,872. 872. We got 12.98. That means almost 13% return we got in one trading day. So it's a very good profit. This is for the first entry. So what about the second entry? The second entry we got on 28th a little deep into the zone. Earlier this one is a 15-minute zone, but this one is 75 minutes zone. You should look into this. The reason why I have gone to the 15-minute zone, to manage the risk, I didn't find a suitable 75-minute zone near daily zone high. Because most of the time what happens, price reaches this zone high and then it will go back. That is what happens in high liquidity zones. So I can't bear this whole risk in this daily demand zone. But near this zone high, I didn't find 75-minute zone also. I didn't find. I have to wait till below this. But there are higher chances of missing the trade. That is what we have seen. Price didn't reach till this 75-minute zone. So to manage the trade, what I did, I went to the 15 minutes and then I fine-tuned. So I found a 15 minutes demand at this zone high. Which zone high? Daily time frame zone high. So exactly 15 minutes demand zone is in confluence with daily demand zone near daily demand zone high. This point you should understand. That way we managed. What about the second trade? When it gets the second trade in the 75 minutes, I found 75 minutes. I have to look for 75 minutes supply for exit. So here I found a 75-minute supply. I got an entry at 75 minutes zone high. That is, price is 1372 is the entry minus when we exited here. One three 89. 1389. This is the target. So we got 17 rupees profit on each share. So 500 is the lot size. So into 500, we got 8,500 rupees profit in 2 trading days. So what is the return on investment? Into 100 divided by 1,22,872. So you got 6.9%, close to 7% return on investment you got within 2 trading days. So it's a good return on investment. The same return you get in bank in 1 year. Whatever you get within 1 year in a bank and interest rate, you got in just 2 trading days. So this is about HAVELLS. Any other next stock? High liquidity zone. Because we have seen all successful. One entry we missed. If we would have taken the entry on the same zone, 75-minute zone, we would have got that entry, but it is against our principles. That is the reason why we missed one entry, but remaining all successful here. Okay, HAVELLS next. So no more high liquidity demand zones. So now what we do, now we will analyze supply zones. What is the performance of supply zones on the same day? So stocks near daily supply zone. Entry time frame is daily here. So all these are all stocks near supply zones. When end of the day 22/9/2023. So do we have high liquidity zones here? Yes. We have ABB high liquidity zone. We have Asian Paints high liquidity zone. We have ICICI Prudential high liquidity zone. We have IndusInd Bank high liquidity zone. We have Manappuram high liquidity zone. We have McDonald, that is United Sprint, high liquidity zone. And we have persistent high liquidity. We have almost every stock is here is a high liquidity supply zone, except one stock. Remaining all out of 8, 7 are high liquidity zones. First, let us look into ABB. Is ABB is a fresh zone? Yes. Fresh zones are always good. But the thing is, uptrend and uptrend, but daily trend is down. So we go to one time frame lower or two time frames lower. That is our strategy. Generally, I prefer one time frame is okay. ABB. So let's open ABB. So we have ABB, high liquidity zone. Here we have a demand zone. It reached the target. But only thing is, we narrowly missed the entry, ABB. Narrowly missed. So we fine tuned because the risk is very high on the daily demand zone. We fine tuned to 75 minutes level near the daily zone entry. That is for supply zone low is the entry. So near supply zone low, we have a 75 minute zone. But you know what happened? Just marginally we missed the entry. Sometimes it happens with high liquidity zones. Few points below, just 0.1% or 0.2% price level. Sometimes we miss the entry because they have high liquidity zones are having so much of pending orders, so many pending orders. Just before the zone also there might be pending orders which push the price down. Let me show you how much profit we missed. In case if we would have taken this entry, of course, it is not possible because it didn't reach our entry. But let us assume at least how much profit we missed, at least to understand the power of these high liquidity zones. Let us calculate from this candle high. Just few points here. It is the cost of the stock is 4,260 is the entry somewhere. But 4,250, 10 rupees difference at 4,000 level. Okay. 4250 minus what could have been the target? Four zero 4090. 160 rupees profit we missed because with just a gap of 10 rupees, we missed the entry. If anybody would have added a buffer before the zone, before the entry, they would have got a trade. They would have got a trade. But do we guess we missed this stock? We always wait until it reaches its entry level. Okay, 160. What is this stock? ABB. Reset. 250 is the lot size and the cost of the lot 1,19,862, close to 2 lakhs. We missed 40,000 rupees in profit. How much return on the investment we missed? %20 return on our investment we missed just because of the 10 rupees difference. Narrowly we missed the entry. Otherwise, we would have got a very good profit. In how many trading days we would have got this profit? Just 2 trading days. In this trading day, if we would have gone a little high, another 10 rupees more, we would have got the entry. Our order would have been filled. Then see how, on the same day, it reached the target on the same day. 40,000 rupees profit on the same day. Why it is so powerful? See, the 75-minute zone is also in confluence with daily demand zone. Daily EMA. Of course, 75 is in confluence with daily demand zone, but it is also in confluence with EMA also. And moreover, it is a high liquidity zone. So all these factors together made us miss our entry. Okay? But here, the point is about to understand how powerful NeoStock's high liquidity zones. This is the main objective of making this video. Because we've been publishing several videos, everyday videos, to find the stocks near demand and supply zones. So far, all these trades, either we missed or we got the entry and got the profits. We didn't get any losses so far, whatever the stocks we analyzed. So that means 100% success rate till now. Now we need to look into the stocks further. Okay, let's look into the next stock. So we discussed ABB. Next we look into Asian Paints. Asian Paints is already having one test. Its monthly trend is up, good. Weekly trend is up, good. So that means trend is very good. Daily trend is sideways, no problem. And it is at the equilibrium, that is also good. Risk reward 1.72 risk and 2.21 reward. Okay, anyway, we are fine tuning at 75 minutes level. Let's look into Asian Paints. So this is the high liquidity demand zone. So what is our rule? If it is already a tested zone, we should look for a deep entry. So that is what we found, a 75 minutes at the deep. 75 minutes supply zone. So at the deep, we found the supply zone. Here, we got the supply. Did we get the order filled here? Yes. At what level? 3333 is the entry. 3333. This is the entry. And target here. This is the one. Already demand is holding the prices. So next time also it might hold or it might fail. Anything. That is a different thing. But here it failed. But we never know when price reaches this level. It will. Maybe there is a chance that it might have gone up from here. So this is our target. What is our target? The zone high of this demand zone, 75 minutes demand zone. That is 3184.90. We can say 3185. 3185. So we got 148 rupees profit on each Asian Paint share. So what is the lot size? So Asian Paint, 200 is the lot size. What is the cost of the lot? 1,13,000. So 148 into 200, we got 29,600 rupees profit, close to 30,000 rupees profit we got. So what is the return on investment? What is ROI? So into 100 divided by 1,13,013. So we got 26% profit in Asian Paints. In how many trading days? Let's go to the daily time frame. So on this candle, we published the report. This is the candle we published, 22nd. That is Friday. Next Monday, that is 25th, we got the entry. Order is filled here. 25th, then 26th, 27th, 28th. Last Thursday, we got the target. So that means total 1, 2, 3, 4. In 4 trading days, we got 26% profit on our investment. So it's very good. So what is the next stock? Next high liquidity zone, Bajaj Finserv is not high liquidity zone. ICICI Prudential. ICICI Prudential is a fresh zone. Monthly and weekly are uptrend, but daily is down. That's a good sign because we are going to one time frame lower. And also it is at equilibrium. This will be our first trade. So the risk is 3.45, reward is 2.41. Risk reward is not good on daily. That's why we need to fine tune at 75 minutes level. Let's look into ICICI Prudential. So this is the high liquidity zone. And this is the target. This is the pierced zone. Of course, now it is pierced. But earlier almost it pierced because all the pending orders it consumed. Now price may go even more deep. We don't know. But when we publish this result on this candle, on this green candle, we published at the end of the day, we published the result. The stock near daily supply zone. Have we got the entry on the next day? No, Monday we didn't get, but we got an entry on Tuesday. Just the zone. Low we got the entry. That is the power of these high liquidity zones. And then this is the first trading day, second, third, we got the target. So what is the entry here? $586.15 zone low, 586.15. Minus, what is the target here? 569.50. So 16.65 is the profit on each share. So what is the lot size of ICICI Prudential? $1,500. And what is the cost of the lot? 1,66,000 rupees. So 16.65 into 1,500. We got 24,975. That means close to 25,000 rupees profit. So what is ROI? Return on investment. 200 divided by the cost of the lot. 1,66,329. So 15% profit we got in just 3 trading days. 15%. Okay, it looks everything good, right? But the point you should understand, I would not have taken this trade. The reason is risk management. See the risk. I couldn't able to fine tune properly in. See, near this zone low, I didn't find any supply zone, proper supply zone. My proper supply I found here. Somewhere here I have. I would not have got a first entry. Because most of the first entry for high liquidity zones, you get at the zone low. But how to manage the risk? Just because I couldn't manage my risk, because you should be very strict, even though it is high liquidity zone, even though you might be missing your trade opportunity, but you should not compromise, especially for the risk management point of view. So even I looked into the 15 minutes level, even 5 minutes level, I couldn't get the 15 minutes here, somewhere here I got the supply. This is the drop, base, and this is the again a drop candle. It looks like green, but it is a drop candle. Here we got. But still, you might have missed the entry. Draw this. The supply zone. You would not have got the entry. Marginally you missed at 15 minutes level. But the problem is again 15 minutes level, you should look for your target at 15 minutes level demand only. If anybody would have bluntly taken a trade on this stock without following risk management, yes, you would have got this profit. But we don't do like that, right? But still, here the point is not about how much profit we got. Here the question is how well these high liquidity zones are working. That's why I told earlier the failure rate for NeoStock's high liquidity zones are less. I'm not saying they won't fail, they will fail. I have seen in the past there are few high liquidity zones, fresh zone, they failed. It happened, but it happened in a rarely. Because it happens, you should not take this whole risk. Just imagine what would have happened. It took an entry, then price went up, 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 and broke this. How much loss you might have got. See the zone, how big supply zone it is. So much of loss you might have got. Because anyway, why should we take risk here? We have other stocks. If this is the only one stock available, you don't have any other stocks, then obviously you have to worry and probably you accept the risk. But you have so many other stocks. Except one stock, almost every stock in this report is a high liquidity zone. Got it? Though we got good profit on this zone, if you would have gone for the trade without risk management, still you got the profit. But we won't do like that. Just to tell you, I explained this. Because if anybody in a blunt way you are taking the trades at the zone low or for supply zones, at zone high for demand zones, that is not the way of doing the trade. You must strictly follow your risk management. You never know what will happen each time. Okay, this is about high liquid, about ICICI Prudential. We got a good profit, but risk management not allowed us to go for this trade. And what is the next trade? IndusInd Bank, high liquidity zone. I bluntly reject this zone. Can you guess why I reject this zone? One important column you should observe here. Okay, you may say trend up, up. Okay, trend, sometimes we can go against the trend in high liquidity zones. So that is not the issue. Is it because it is tested 3 times? No. Previous we have seen earlier in one of the examples, we took 4th test also, it was successful. The reason is it is already pierced. Look into this column, PIE. PIE stands for pierced zone. See the pierced count, 1. That means it is already pierced. We never go for trades if the zone is pierced. Then why we are displaying these zones? Just to reference purpose. Because I explained in one of the videos how to trade with pierced zones. If a zone is pierced means there could have been a trap. If it is a supply zone, there could have been a bull trap. If it is a demand zone, there could have been a bear trap. To identify those traps, we use the pierced zones. If anybody would like to understand the pierced zones in a proper way, I already published a video. Please go to the video. And please go through the video. It is available under NeoStock terminology playlist. So, IndusInd Bank, we rejected the trade. And the next, what is the next one? Manappuram. It is the tested ones. Manappuram. Let me check. I didn't analyze this stock. Why? Oh, sorry, my bad. So it is a TCO zone, not TCP. It is a TCO zone. It is a confirmation trading related because I don't want to look into these two because these strategies are different for confirmation trading. Okay, next one is United Sprint, McDonald's, TCP underscore SZ. So recently trend is changed and the test count is 0, though it is having one rejection. When 15/9/2023. This rejection might have given a trading opportunity. We might have been late to get into this entry. But have you got the second entry in the lower time frame? Let us look into that. It is at the equilibrium. Good. All these factors are unfavorable. It is a counter trend trade. So when we publish this result on 22nd on this candle, but already in this candle it gave one entry. You should not forget that. That is one trade we missed, but still we got a trading opportunity. I'll show you how it is. Go to the 75 minutes. This high liquidity zone on Friday, it got an order. It gave a fill. That means it gave an entry. When we published this report on 22nd end of the day, after this candle, we published the report. That means we already missed this entry. But what happened? Next day on Friday, sorry, on 22nd, 10:30 we got this fill, we got this entry, and then it formed a new supply zone. This is a new supply zone. How this supply zone is in confluence with high liquidity zone. This is in confluence. So now you can take an entry in this supply zone. At least one test you can get. Have you got the entry on the supply zone? Yes. But we didn't get entry after 22nd. We didn't get entry on this daily supply zone. But we got an entry on this newly created 75-minute supply zone. This entry we got on 22nd. After we published before publishing the report itself, we got the entry. Okay, second entry we got on this 75. Maybe you would have taken this entry. We got once again we got this entry. In case if you miss this, still you got one more entry. And finally it reached the target. So what is the entry here? One zero two 1.70. 1021.70. And this is the target. One zero zero two. So we got 19.7 rupees profit we got in this stock. So 700 is the lot size and 1,25,221 is our cost of the lot or our investment. How much profit we got into 700? 13,790 rupees profit we got. What is the return on the investment? Into 100 divided by 1,25,221. We got 11% return on the investment. In how many trading days? Let's go to the daily time frame and find. Here we got the entry. This is the first candle, second, third, and fourth. Fourth candle we reached the target. That means in 4 trading days. Monday we got the entry and Thursday we got the target. So this 11% return in 4 trading days. McDonald's. And the last stock is persistent. See, observe everything so far we have, everything is success. No stock is failed. Persistent. Let us check whether it is success or fail. So what is the trend? This is also counter trend stock. So it is a perfect because the monthly is up, weekly is up, but the daily trend is sideways. And it is a fresh zone. Let us check whether we got the entry or we missed the entry or something wrong is happened. We will check. What is the risk? 1.56%, 1.15, almost close to 1:1. But anyway, we trade as per risk management at 75 minutes time frame level. So this is the zone. Here we found some demand zone at 75 minutes level where price is pushing this demand zone. But anyway, this has already happened and we are looking into. But what is our target? See here, where orders is taking place. Look into this blue color line I have drawn. This blue color line is having the order flow. Price is reaching and pushing it up. Price is reaching, again pushing it up. Now price is reaching, maybe it went below this. This is a different scenario, but most of the time, order flow is started from here. So this line is our target. This is one approach. There are several approaches you follow. Or you draw a 75 minutes supply zone here. Somewhere you find and you will make that as your target. That is another possibility. And third, I already told you during last videos, in counter trend trading, if you find price over extension, the EMA is your target. See here? Exactly this blue color line and your EMA almost they are matching. So that's why I fixed this order flow. I was thinking maybe next price also come here or little low and then again it will go up. That is what I predicted, but unfortunately it went even more deep. That is a different scenario. But our target is until this blue line because there is a heavy order flow happened in the past and EMA is also near to that line. So got it? Okay. What is our entry? Entry is this zone low. What is zone low? 5894. 5894 minus our target. So when we publish this report, end of the day, because this candle is near to this zone. So our software identified and published this stock. Next day we got the target. I'm sorry. Next day it reached the entry. Order is filled here. Our entry, our order is filled. So we got the entry. 1, 2, 3, fourth candle. 1, 2, 3, fourth candle. It reached the target. So what is this line? 5711.80. Let us say 5712. 5712 is our target. So we got 182 rupees profit on each stock. So what is the lot size of persistent? $175 is the lot size. And what is the cost of the lot? 2,11,159. So into 175. So we got 31,850 rupees profit on this stock. What is the ROI, return on investment? So into 100 divided by cost of the lot, 2,11,159. We got 15% return on investment, ROI. Very good. In 4 trading days we got. So this is the last stock, right? So have you seen a single failure in this stock? We have analyzed demand zones, they worked well. We have analyzed supply zones, they also worked well. Few stocks we missed the entry narrowly. Otherwise, they also would have given a good profit. Otherwise, even we have analyzed that. Some stocks even they gave good profit even though it is a fifth entry, already tested 4 times. And one stock, one interesting stock also we have seen. We find another high liquidity zone at 75 minutes level. That gave the entry and it did not allow price to reach to daily demand zone. So very interesting factors we have identified in this particular video. In our analysis. That's why every video I'm publishing, I'm saying focus on high liquidity zones. See, but you should also accept the fact that there are times high liquidity zones also will fail. The reasons could be different for that. But most of the time, they have good success, especially high liquidity zones with the fresh zone or one entry, probably they work much better, in a much better. If it is already tested, the deep entry at lower time frames, they are working very well. See, these are all these things I observed over a period of time. That way, I build different strategies for the trading purpose, not analysis purpose, for the trading purpose. While trading, strategy is very important because risk management. If you don't manage the risk, you get heavy losses. Sometimes you might miss the entry because of your risk management. Okay, that's okay. Missing an entry is better than getting losses, right? Or at least getting huge losses. If you do proper risk management, your loss is very minimal. So far, we have analyzed stocks 3 times to check the performance. In all the 3 times, we have seen only one failure, that too for second entry. In remaining all the stocks in the first video, all the stocks they got success. Second video, all the stocks except one. And in this video, again, all the stocks they succeeded. So always you should focus on the trend, you should focus on the curve or location. That is high on curve or low on curve or in the equilibrium. Then you need to manage your risk. See, one of the stocks, it gave a good return. But still, we don't want to accept the stock for our entry because we are not able to manage the risk in that stock. So leave that stock, even though it is a fresh zone, high liquidity zone. Still, our risk management is not supporting. When we went to the 15 minutes level, price didn't reach up to that level. That is what happened in high liquidity zones, especially during the first entry. At the zone high, if it is a demand zone, or zone low, if it is a supply zone, they push the price up or down. Hope this video will also help you to understand how important NeoStock's high liquidity zones. Thank you all for watching this video. Have a good day. Take care. Bye bye.